Hello and welcome to a new episode of the Energy Connects podcast with me, Chiranjib Sengupta. Today we are talking about the state of the energy industry, especially in relation to energy security and curbing emissions. And to discuss more about that, I'm delighted to have joining me in the podcast today, Ben Cahill, Senior Fellow, Energy Security and Climate Change Program at the Center for Strategic and International Studies, or CSIS. Thank you so much for joining us today, Ben. And to start off, how is the global LNG sector shaping up this year in the background of the US LNG pause?
Well, thanks for having me on the podcast. It's great to be here. The pause has generated a lot of press, a lot of attention. There are many questions being asked, I think, about the future of US LNG exports and anything that happens that could affect the policy climate for US LNG is significant because the US is now officially the world's largest LNG exporter, more than Qatar and more than Australia. And the policy decision certainly took a lot of people by surprise when it was announced in late January. I think the critical thing, though, is that it does not have any near-term impact on market balances or supply, because the pause in approvals of new LNG export projects in the US doesn't affect current production, and it also does not affect the projects that are under construction. So the US LNG export capacity is now about 86 million tons. That's what the US produced in 2023. We have about an 85% capacity addition underway. So with the 5 major projects that are currently under construction or completing construction, by 2030, we're going to have a big expansion. So this decision is really about what happens after 2030. And in that sense, I think the policy signal is really important, but it doesn't really affect the near-term market balances or even the medium-term all that much. It's really a post-2030 question. But certainly it's had a ripple effect throughout the LNG market. We saw a couple of weeks ago that Qatar announced an additional capacity expansion. They're going to add another 16 million tons to their huge LNG export capacity expansion. And that's in addition to the 2 phases of the expansion that were already underway. So Qatar was going from about 77 million tons up to 126 million tons already. Now they're going to increase that. So between Qatar and the United States, there's a big boom in LNG export capacity additions coming. The question, I think, is what happens after that? And that really depends on your view on long-term LNG demand. And I think the export pause in the United States has touched off, a healthy debate about what demand will look like after 2035 and what's the role of the United States and other countries in meeting that demand.
That's a really fantastic overview, Ben, and then leads to my next question. Of course, you said that it's going to have a very limited impact in the near term, but looking at it from a point of energy security and, at a time when the demand for natural gas is increasing, what are your thoughts on that?
Yeah. Last year, the world traded something like 400 million tons of LNG. The projections by groups like Wood Mackenzie and Shell and other companies are that we'll get to maybe 650 million tons of LNG demand or more by around the year 2040. So that's a big increase in demand. And it looks like the market is going to be pretty well supplied probably until about 2030 at this point, because we have such a big capacity addition coming online in the United States and Qatar, and then some marginal volumes from elsewhere. So I think the question is, what are the assumptions behind that robust long-term LNG demand outlook? A lot of it is not really about Northeast Asia, about some of the largest LNG consumers in the world, markets like Japan and South Korea, because those are fairly mature markets, probably not going to grow that much over time. It's not really a debate about Europe. And of course, the story of the last couple of years is that Europe absorbed so much LNG because it had to replace Russian pipeline volumes. So we saw this incredible shift in volumes in the last couple of years where something like 2/3 of US LNG export cargoes ended up in Europe and the UK in 2022 and 2023. A lot of the focus on energy security, I think, is a little bit misplaced because we tend to look backwards towards what happened in the last couple of years. This LNG export pause and the questions about long-term LNG demand are really not about Europe. It's not even really about Northeast Asia. It's mostly about emerging Asia. So it's markets like India, Pakistan, Bangladesh, Southeast Asia. this is where the big wedge of future LNG demand growth is going to come from. And, I think there's a lot of division of opinion about how real that LNG demand growth will be. So these are fast-growing markets. They're strong economic growth. Many of them are mature to declining domestic gas producers. So the expectation is that LNG demand will grow over time. And a lot of that gas could replace coal. So it certainly could be a net emissions win and a net climate win. But I think the critical thing is that these are pretty price-sensitive markets. And we've seen in recent years that it's hard for LNG to compete with cheap coal and increasingly cheap and abundant renewables in these markets. So on balance, I think that making LNG more scarce and more expensive makes it harder for LNG to compete in these markets. And, this is the drawback to the US LNG export pause, right? I mean, if you believe that gas has a role in displacing coal or helping these countries transition to a greener future, then any sign that you're going to restrict LNG supply is negative, right? On the other hand, I do think that some of the long-term LNG demand forecasts maybe have too rosy a view on how much gas demand will grow in markets like China and Southeast Asia. So this is one of the great debates in the LNG world, I think.
Absolutely. And that's a really complex equation. And one of the things that when we talk about LNG and its growing influence all over the sector is also how it relates to emissions. And in your view, is the industry doing enough to curb emissions?
Yeah, I think this issue about emissions intensity of LNG and gas more generally is going to be a big issue. And to me, it's a lot easier to make that climate case for gas, especially in displacing coal, if we really know about the emissions intensity of the gas that countries are buying. And of course, the reality is a lot of the emissions, the greenhouse gas emissions associated with gas and LNG come from combustion, right? Something like 75% of total CO2 emissions come from the combustion phase. But along the entire gas supply chain, from production through gathering and boosting, through midstream transportation, through liquefaction and shipping, there are methane leaks. And methane leaks are a real issue. If you add it all up, it's quite substantial. And everything we know about measuring methane along gas and LNG supply chains shows us that this is a significant issue. And I think what we've seen in the last couple of years is we've had a lot of price volatility and extremely high gas and LNG prices in certain periods. And some of these emissions intensity concerns, I wouldn't say they went away, but they were kind of put on the back burner. Increasingly, I think as the market is better supplied over the medium term and buyers start to see more choice and they have, a choice of competing sellers, they will start to look at the emissions intensity in a more serious way. And the strongest policy signal that we've seen on this front is really coming from Europe. So Europe is just about to finalize its methane legislation. That applies to domestic gas production and oil production, but it also applies to imported fuels. And so in a series of steps between now and 2030, Europe is basically going to start gathering data on the emissions intensity of all the gas and oil and coal that the European Union consumes. And it's going to develop what they call methane supply index or methane performance profiles of all the major countries that sell into the EU. And by 2027 and 2030, the demands will ratchet up. What this means basically is that, if you're a significant gas and LNG supplier and you want to send volumes to Europe, you're going to have to provide this data. And on its own, maybe this isn't large enough to send a ripple effect throughout the whole industry and change the way that gas suppliers are required to provide this kind of emissions data. But if Japan and Korea and some of the other large markets also start to follow suit and analyze this data and demand it of sellers, it definitely could create a kind of cascade effect. And I think this is an important issue for the industry to grapple with because, again, it's about making the case for gas. If you want to make a credible case for the role of gas throughout the energy transition, it's really important to get this right. So we have supply side emissions rules that are emerging in the United States and Europe. But if we start to get that signal from the demand side and from major LNG importers, that will really add to the incentives for the whole industry to measure their methane emissions better and start to differentiate possibly between so-called cleaner gas or less emissions intensive gas and other suppliers.
Right. And I think we've started seeing some of the signals on the policy side, like, for example, with the Global Methane Pledge and the Oil and Gas Decarbonisation Charter that was adopted at COP28 last year. In your view, what has been the impact of such initiatives?
I think a couple things are happening simultaneously. First, you have companies that really face pressure from investors and shareholders to present clear plans to cut methane emissions throughout their operations. So especially if you're, a large independent, big oil and gas producer in Europe or the United States, you have to get your methane story right. And investors are starting to get quite sophisticated in asking for certain types of data. So there is a clear corporate directive to do this, and I think the calls are only growing. You also have an important policy or regulatory driver. So in the United States, the Environmental Protection Agency last year finalized a really important rule on methane and volatile organic compounds emissions, both from existing and new sources of production. So companies will have to comply with that. There's a methane fee, which basically means that producers above a certain volume they'll have to pay a fee on the methane emissions that they produce, unless they can prove that they're below a certain level. And it's going to change the way that the industry has to do emissions reporting. So all these things add up. They're quite significant. It's paired with what Europe is doing on the emissions front as well. And I think increasingly, methane is really seen as an important issue in international climate negotiations. So you mentioned the Global Methane Pledge that emerged in 2021 at the COP26 conference in Glasgow. That was a collective effort by now more than 150 countries to cut methane emissions by 30% by the year 2030. That was kind of the emergence of methane as a really big international climate issue, and it's grown in the years since. And the other issue you mentioned is what's called the Oil and Gas Decarbonisation Charter. And that was basically an agreement by 50 companies at the last COP in Dubai, COP28, to reach near zero methane emissions by 2030, including a lot of national oil companies who made this commitment for the first time. So it is significant. It's a huge challenge. 2030 is right around the corner, right? So it's going to be really hard to meet these goals. But there's a lot of civil society and NGO and philanthropy money that is flowing towards the oil and gas companies that need help, including NOCs, to help figure out how to better measure their methane emissions. There are important partnerships that are emerging and joint ventures with some of the majors to make this happen. And so the policy momentum is real. Now we're getting into the execution phase, and a lot has to happen by 2030 to get there, but I'm optimistic that the industry is starting to take this issue seriously.
Right. And as a complementary measure, how do you see the emergence of, for example, last week there was a coalition formed on ENG. So how do you see those kind of initiatives complementing the whole energy, the industry's pursuit of lower emissions?
In general, I think that a lot of companies are exploring lower carbon fuels, whether that's blue or green hydrogen or ammonia. It's part of a portfolio of investing in renewables and CCS. So synthetic methane or methanation is a process that I know some Japanese companies are looking at. And it's all part of this package of trying to respond to the pressure to lower emissions intensity and start to invest in, fuels with lower emissions footprint. So I think it's fairly early days, but some of the larger Japanese companies are making serious investments in this, and I think some major US LNG players too. So let's see.
Ben, it was such a pleasure talking to you, and thank you for that brilliant analysis and your superb insights.
Well, thanks so much. It's really a pleasure to be here, and I look forward to speaking with you again soon.
A big thank you to everyone joining us. You can listen to more podcasts like this and get comprehensive coverage from across the energy industry at energyconnect.com. I will be back with more guests from across the industry in the next episode of the Energy Connects podcast. Until then, goodbye.